Introduction to Gold ETFs. Imagine standing on the floor of the New York Stock Exchange in 2006. A new ticker appears on the screen, GLD. At first glance, it might look like just another financial instrument, but in reality, this moment marked a fundamental shift in how the world interacts with gold. For centuries, gold was something you held physically, coins, bars, stored in vaults, but now suddenly anyone could gain exposure to gold with just a click, just like buying a stock. This was revolutionary. GLD made it possible for the average investor to own a fraction of physical gold without worrying about storage, insurance, or transportation. It transformed gold from a heavy physical asset into something fluid, accessible, and instantly tradable. This was not just innovation, it was a complete redefinition of gold ownership. Why ETFs matter? So, why does this matter so much? Before ETFs, investing in gold was complicated. You had to buy physical metal, deal with premiums, and find a safe place to store it. For many people, that was simply too inconvenient or too expensive. ETFs removed all of these barriers. Suddenly, gold became accessible to everyone, not just institutions or wealthy individuals. You could buy it through your regular brokerage account in seconds. It also made gold part of everyday portfolio management. Investors could now easily rebalance, adjust exposure, and react to market conditions without friction. Even more importantly, ETFs opened the door to global participation. Investors from different countries, backgrounds, and income levels could now include gold in their portfolios. This dramatically increased demand and changed how gold behaved as an asset. Overview of the report. In this presentation, we're going to explore this transformation in depth. We'll start by looking at where gold ETFs came from and how they evolved. Then we'll break down the mechanics behind them, especially the creation and redemption process that keeps prices aligned with the market. We'll also analyze how money flows into and out of these ETFs and how that directly influences the price of gold. Because understanding gold today is no longer just about mining or jewelry demand, it's about financial flows. Finally, we'll compare ETFs with physical gold. Each has its strengths and weaknesses, and knowing when to use one over the other is crucial for any serious investor. By the end, you'll see that gold ETFs didn't just make investing easier, they fundamentally reshaped the global gold market.